Greetings. Alright, so let's take a look at the result. It's been about a month, and you may recall from this video I made about a month ago.
It's on this day here, which is November 13, and I think it's a few days after
laying out the prediction, what I expected, what I anticipated to happen. I said that there was going to be this target, which is that horizontal line, this horizontal line right here. And I believe I was giving a progress, an update on this. Maybe this is about a couple of months ago, but you can see that I was referring to this right here, this as the support and reversal area, the polarity area. That is this area here, and at this time, I believe I've been covering this trade since it was here at this point. So it proceeded down into this area. This was a target itself. Then I said I would buy here, but if it comes down here under this area, this region, that I would sell and use this as a stop, which I did. So I had to change the position again. It did in fact go up above there, used it as a support, and then continued to climb for the remaining days and month, where it was currently at this point. And I said that it was halfway through this that process, and I was targeting this area here, this horizontal resistance, which, as you know, these are all trend averages, and that is this line right here. And so that trend average, if we zoom out, we can see that that trend average belongs to the weekly time frame. This belongs to the monthly time frame. So it is now over that weekly, that trend average, and is processing towards the monthly average, monthly standard deviation. So as you can see, it did break through that, and this in fact is just a couple of months here, and that decision zone was this, in fact, this part right here. So you can see how small of a piece this is on the monthly time frame. I mean, in fact, you can't even see it here. On the weekly time frame, it's that size. On the day, of all this price action, on the daily, it's this size. Let's go back to that video, and so you can see this video is about it almost finished with that move, that price action, and that was December 17th, so that was about 6 weeks ago. So it was almost through with that. So what in fact happened is it retraced. It almost got there one time, almost got there at these 2 points here, and that I believe is this time here. Generally what you're seeing here, I believe that this part here is this, and so it almost made it to this region. I wanted to see what it would do, how it would treat this as a polarity, as a resistance. It didn't reach there. It retraced back into this area, and so then I was waiting to see what would happen with that. Would it drift back in here and use it as support? Would it go past this? And in fact, it appears that it hit the 200 moving average. For people following 200 moving average, you can see it hit the 200 moving average here and also here, and then retraced. So essentially it used this as a support and then returned back up, went back up into the monthly, the weekly standard deviation. So it used the H1, the hourly, and the 15-minute time frame standard deviations as support, and then went back into the weekly standard deviation. You can see it broke through the weekly standard deviation. It's now using that as support. If we look into here, we can see that this is the weekly standard deviation is clearly broken through that. So this trade is officially finished. It's completed. So we had a buy here, a sell here, a stop and reverse and a sell, and then a stop and reverse again. So two changes of position, 3 orders total. And the total range on that captured was 280, 290 pips, 280 pips. A lot of waiting, about 6 weeks, one big retracement, 280 pips. And the amount that you would have lost on the changing, the transition, was about 65 pips each time, so 120. So total, at least 180 pips made on this trade. Now that is 6 weeks. But as you know, when I change a position, I'm usually counting on it taking a side, and so what I'll do is for each order, I'll increase by one order. So if I entered one lot initially on a buy here and I had to stop and reverse, I'll enter 2 lots, and then if it stops and reverse again, I'll enter 3 lots. And so this, when it is finally successful in 3 lots, that 280 becomes 800 pips, 800 effectively 800 in profit. Where here you lost only 60 and 120, 180, so you make 600 instead of 180. You could do that, or you can just play it to, the most conservative and just not increase your lots, not use that type of money management. So this video is just to show that the target was hit, target was achieved, and what's going on here? Looks like I'm talking about this, using this as support or something. Waiting for it to decide on that. Right, I think that was before, that was during this point or something. So yeah, you can see the difference there. It is in fact climbing above here, above this weekly standard deviation. And if we move to the daily, you can see that you could now use this as support, and you could target this, the monthly standard deviation. Now again, this is a snapshot of the market structure on essentially on months ago, basically November 10th. This was a snapshot of the market structure on November 10th. So whatever is going on right now is whatever support, and polarities and resistances it's using is essentially stuff that was identified 2 months ago. So, question is, does the market shift? It appears that it doesn't shift that much, and stuff that is relevant market structure that existed 2 months ago, the market does not shift that much. So it is still resonating with it, and so it will shift a little. It's kind of like if you take a snapshot of a building. The building itself is not going to move. People expect the building is not going to move very much. I mean, possibly the land around it will shift a little, the earth will shift a little, but the building itself, essentially, when you take a snapshot of something, technically, right, in the smallest measurements, you can detect movement, but effectively, when you take a photograph, you don't see the hill just get up and walk away, right? There is no major transitions, right? Usually there isn't any major transitions in nature when you take a photograph. So this is essentially what you're doing. You're taking a photograph of an instant in time in the market structure, and that market structure, the future market, essentially operates the same, resonates the same with that point, the 2 months ago, that you took a snapshot, took a photograph of it as. So, so if we created a new market structure, now that we've hit a target, I could create a new market structure. Obviously, I can create the market structure at any time, right? And that snapshot is also equally as effective, as strong, right? So if you take a new snapshot, it will look different. The market structure will look different than the snapshot 2 months ago, but it will have equal strength. It will operate the same way. Will have the same effect. So, in fact, I can do that now since I've already hit that market structure. I would be interested. Also, sometimes there are some shifts where you may think that the current shifting of the market, the price action is not reacting like the market structure snapshot you took a couple of months ago. So in that case, you would want to take a new snapshot, new market structure snapshot, and see if that one works better. So, okay, so I'm going to change this because I'm going to just say that this target was achieved. I can very clearly see that target was achieved. So we'll create a new market structure and follow that. Right, so here's the new market structure. I'll just keep this, and we can see that the monthly is still monthly standard deviation is still working towards that, still up above. This is the weekly standard deviation, so it's reached the weekly standard deviation. One day it will achieve the monthly standard deviation, so this is a long-term goal. It's just trying to balance the price. That's called the market exchange. The fair value, the market exchange fair value is tends to balance itself around the standard deviation, right? So in order to keep the market exchange rate balanced, it will balance itself around the standard deviation. This is because of political legislation, political policy also as well. So as far as changing the interest rates and so on like that. So so what I would say is because the United States right now, we're under the standard deviation for the Euro US. The policies will be for the US to weaken the value of the US dollar, to keep it weakened. They won't want to strengthen it. They'll want to weaken it so it achieves the standard deviation. And it's definitely far below the standard deviation, which means that it will remain weak for a very long time. And this could be we could be talking about a decade or something like that. So so I think for the next decade you will see the euro strong and the US dollar weak. So if we come into that, we can see that this is, again, here's the monthly. This is about 1,300 pips away. So we can see like most of these smaller standard deviations, 30-minute, hour, the 4-hour, and the 1 minute are all looking up towards that monthly standard deviation. Okay, so they've achieved the weekly standard deviation, which is a very big term. What about the next long term? It's looking higher than that, right? It's looking even higher towards the monthly. The one below it is the daily. So you've got the weekly, and the price is at the weekly, and the daily is below, and the monthly is above. So it's looking long term and up towards the euro. It's not looking short term down. Okay, but it broke through resistance, broke through the weekly resistance. So we're about to see if it will use that as a support, that weekly as a support. So we're looking for confirmation. Now we can see more of these standard deviations in play. We've got here's the H4 closer to, after breaking the weekly, it's got the H4 as the resistance, the H4 standard deviation as a resistance. So that would effectively be the next target, the next major target that I would look at. That's 120 pips away. And this is something you could look at, is this gap here to decide to buy or sell. If it's above it, you're looking to hit this at 150 pips. And if it's under this gap, then you're looking to sell at this support, which is 111 pips. That's it for now. I'm out of the 15 minutes, and we'll come back to this.